Good day, everyone. This is Dan. This entry is primarily going out to Sharpe Trade folks on November the 26th, 2024, and I will say, hey, Sharpe Trade folks. How's Sharpe Trade folks? I hope you're doing well. And yes, this is Dan. It's a long time no talk, right? First of all, we wanted to update folks that had been with Sharpe Trade. We sort of wanted to catch them up to what I was doing and what I've been doing. And then we're going to go through some of the new projects and explain a little bit of depth behind that, and then how we're going to change things up a little bit. Okay? So, let's talk about that. First of all, Sharpe Trade folks, did you know I was back? Some of you may not have known I was back. So why did I leave in the first place? Because it's been 7 years. So what went on there anyways? Well, what happened was I got a shot at institutional efforts. And quite frankly, the money that was being discussed was just far too attractive, right? That I had to pursue it. And here's the issue. The structure, the legal structure that Sharpe Trade was under, I couldn't do both. It was like, you can either do Sharpe Trade or you can do this. And it's like, the money was too good. So it's like, as much as I enjoy Sharpe Trade and we were having a great time, no, I was like, I got to take it. I got to take my shot, right? And so I did. And I'm still in the middle of that, right? Now, I had said the legal structure that Sharpe Trade was under. So what's happened? Why are you hearing from me? I always enjoyed Sharpe Trade. I enjoyed what came before it. Do you remember what came before it? No-nonsense trading. Do you remember no-nonsense trading? Loved it. Loved doing it. I enjoy doing this. I enjoy talking to you now. It's part of my teacher personality, right? So, what's the deal, Dan? Then why are you talking to us? Well, I'm still in institutional efforts, probably more heavily now and becoming more heavily involved in institutional efforts as time goes by. But I always enjoyed doing this. And so I'm involved in businesses and even trusts. Like, I feel like I'm starting to collect them like some people collect baseball cards. It's sort of getting a little bit ridiculous, which has made beneficial ownership information reporting not easy, let me tell you. Because, like I said, I'm picking up businesses and acting as a trustee in far too much. I got way too much going on. And in typical Dan fashion, why not add one more thing to the plate? Right? Why not add one more thing to the plate? So what I've done, and I and a couple of other partners did, is I'm involved in a much larger corporate structure, right, that these companies are under. And I said, well, wait a minute. With this new corporate structure, we could create a new brand of one of the companies, make it equities only, and that way, I can do both. And partners agreed. And so that's what we've done. So if you're not aware, if you were one of the Sharpe Trade folks and you love Sharpe Trade and you love no-nonsense trading, I had people tell me it was the best $15 and the money on the courses that they had ever spent, ever. And I appreciate that. I appreciate that sort of feedback. Well, if you did enjoy Sharpe Trade, and you did enjoy no-nonsense trading, we've created a new brand. So I'm going to talk about the new brand here just a second and some changes we're making to the brand. Here we go. If you were not aware, sorry I had to go through that before. Some of you are already aware of this, but I just had to go through it for the I can still talk. The Sharpe Trade folks that were not aware, we have a new brand, GTC Traders. That's not the company. It's just a brand that we came up with and put under one of the companies. And it's got a lot of the features that you're used to. There's a sample portfolio. It's a multi-strat, systematic, discretionary. It's got some quantitative programs that are running. It's got some systematic discretionary programs that we run. We talk about that, right? So we have articles that we produce. I have said that I feel like I have learned more in the last 7 years than I had learned in the preceding 17 years. So we talk about that. If you want to subscribe to the articles for free, it's free. And we don't bother people with emails with a bunch of promo stuff. I just don't do that. I hate it when people do it to me, so I don't do it to anybody else, and neither do the other partners. You can put your email in there and get articles. There's a sample portfolio. Well, now we keep this a little more to known standards right? So there is an actual grid that's being produced, right? For the multi-strat, there's the track record. I didn't include all the 2008 and 2010 stuff on macroeconomic outlooks, and I was like, I'd really like to. Some of you know what they were, and we were bang on accurate, right? But we're keeping track of that now on the sample page. So yeah, about us page. It's all here, right? GTC Traders. So if you love no-nonsense trading, if you loved Sharpe Trade, this is here. And now I can do it because it's a different corporate structure. We can place this as equities only and place it in a specific way, right? We've got things structured so that I can do both. So it's like, yay, I can do both, right? There is premium content. You come down that $15 a month, right? Premium content, you go right there. And it will take you to, let me see, that's stuff I want to get to here in the future. It will take you here. GTC Traders, you can join for free. There is a membership. We used to have 2. So let me talk about this. This is something we've restructured. We used to have 2, and I've said, no, that's not working. Let's go back to what I had, and I enjoyed, and I think everybody else enjoyed it, no-nonsense trading. Let's go back to that. And I think that's what works. So I think what we've been doing, I just don't think it works as well. So what have we been doing? Okay. Also, one of the structures for friends and family, and that is a very specific structure with a lot of regulations behind it that you have to adhere to. I'm the senior partner in that particular structure, and it's a private prop. Now, let me just say this. Anytime I say the word prop anymore, I feel like I'm saying a dirty word. Prop has evolved from what it used to be. If you're not aware, go over to YouTube, right? So if you come over to YouTube and you do a search for GTC Traders, you're going to find GTC Traders. Do a search for GTC Traders Open Prop. This entry right here, right? So this entry right here, funded traders fee arbitrage on the dream of trading. I don't believe in, well, I'm just going to, how about it this way? I'm going to scroll down so it hides what was up there. I don't believe in what's being called open prop anymore. I think it's fee arbitrage for people that would love to be a trader, and it's just fee arbing them to death. And I being polite in this particular video entry, I get a little bit more specific, a little more typical Dan in that particular entry. So if you want to, I don't believe in it at all. I think it's a shame. I think it's a shame that that's being purported as a viable entry into the career of trading. That's my opinion, right? My thoughts, not yours, right? My thoughts, not yours. And I think my thoughts, not yours. I think it is a shame that that's being allowed to continue. So if you want my full thoughts on that, now that's open prop. Open prop. Private prop is still very legitimate and still very much a thing. In the institutional world, that's what everybody does. I don't care what institution they're working at. They set up the structure. This is private prop. They run it under all the friends and family, the regulations that adhere to friends and family. They make sure they check all those boxes, and I do as well. So I say that to say this. I'm sorry. I know it's Dan, right? I got to have a tangent. It's not me if you haven't heard from me, if I don't have a tangent. So that's my tangent. Anytime I say the word prop, it feels like a dirty word because of what's going on with open prop. But it's private prop. Okay, so that was my little side tangent on the dirty word of open prop, and it is. But in the institutional world, we have private prop, and that's still very legitimate, very much a thing. Traders that work at institutions will be running something like that, right? So I am also the senior partner of a private prop firm, equities based only. There's a lot of reasons for that. I'm not going to get into them here, but it's equities only, equity options, that sort of thing. A lot of the trading that you saw me doing before. So what I had thought, and I don't think it's working, okay, and we're changing, is, well, I'll just copy everything from the private prop firm over to GTC Traders, and that's what we'll do. And then you'll just have GTC Traders, and you can, and every once in a while I'll throw a video out there, and it'll be just like the old times. And I don't think that worked. I don't think it worked at all. And I'll tell you why I don't think it worked. Because everybody, let's say like one of my other partners, right, that takes a look at a lot of the trading that goes on. We know all of the programs. We know what we're doing each day. And when you're in that structure, there's very much a daily grind, daily routine. You do this every day. What do you get up today? I'll do the daily note. You can read the daily note, the daily position review of the firm, and then we go through our day, right? And I don't think that won't work, because what's GTC Traders? What was no nonsense trading? What's Sharpe Trade supposed to be? We do this. You look over our shoulder, and that's why I thought I'll just copy it. I'll just copy it over, and you can look over our shoulder and see what we're doing each day. And then if you have any questions, ask, right? I don't think that's working, because if you're in a private prop firm and you know all of the programs, then there are no questions. And it doesn't really spur that sort of idea, you know? And I thought, well, I just don't think it's working. And so, and we had 2 tiers. We had like $150 that looked at more quantitative stuff. As long as I can't violate any NDAs, because first of all, I believe in them. I believe in NDAs. I believe in keeping the intellectual property of the firm intact. So I didn't violate that. But we could talk about quantitative stuff, and that was tier 2 and it was tier 1. I just don't think the whole thing was working. Because like if you're in a firm, you know the daily routine. There's not a lot of questions that are asked. You just run it. People are like, well, that's boring. Well, trading should be boring at a certain level, right? So I thought, well, what did work? What did work was no-nonsense trading. What did work was the old Aileron investing and trading blog. What did work was Sharpe Trade. It worked very well, and people really enjoyed it. And I thought, we got to go back to that. We got to go back to that. See, what we've been doing at GTC Traders, and there's, by the way, if you come here, you can join this for free, right? And there are free entries. So if you go to the free entries, you can join for free, and there's a lot of free entries and stuff we put out there. That was my trip back home. Go herd. So, right, my thoughts on 0 DTE options, macroeconomic take at that moment, trading updates, yen carry unwinds. There was one on panic and tech. We're starting to redo the How to Begin series. That was a car accident. That was a bad one. You do not lose what you do not put in the middle. I think a lot of people will enjoy that particular article. It's all up there for free, right? So there's free entries, and for those that did like Sharpe Trade, loved no nonsense trading. For all those people that gave us the free feedback, well, like I said, we had 2 tiers, and I thought let's just go back to what we had at No Nonsense Trading and Sharpe Trade. Everybody seemed to enjoy that, so let's go back to that. So I ixnayed the tier 2 level, right? There's no more tier 2 level. There's only tier 1. I should probably rename it if, it's like, well, wait a minute. If it's tier 1, then where's tier 2? But there's not a tier 2, so. So maybe. But we're just calling it reading the positioning. And I'm just going to do what I did at No Nonsense Trading. See, what I was doing each morning, and we're going to get to some of my thoughts that I've had on VIX Term and the way I use VIX Term. People use it in different ways. So we're also going to have a little bit of an update here. But if you come over to GTC Traders, we generally have had a daily note and a daily position review. And like I said, I don't know. I can hear from you folks that have subscribed. I don't think that's working. Because for us at the private equities firm, that's what we do every day, and then we just go do it. And if there's nothing to do, then there's nothing to do, and I can work on my other businesses and my other institutional efforts. And I don't have to worry about it, right? I don't think that's working for the aforementioned reasons. So we might ixnay this, and I'm going to go back to what we had at No Nonsense Trading. I think that's the way to do it. And the difference is it's just going to be one tier, $15 a month, just like we had at Sharpe Trade, just like we had at No Nonsense Trading, that everybody seemed to enjoy, and I'm just going to talk about everything I can talk about. I'm still going to do the daily note because I think a daily note's important. If you really want to know what we do each day at firms, when you are working at a firm, there's generally something like a morning note or a weekly note, which we have as well, and it should be very quick, very down and dirty, broad look at things. Right. We also have a position review. I'm not sure that's going to translate over. Maybe there's something I can do to do it very quickly. And yeah, we've partnered up with Danny Riley of Mr. Top Step. He's provided a room for us. Some people don't like that. There's another room you can find me in. You come over here, community, or there should be some sort of community thing on the side there. and there's a chats. And I try to hang out there, or at least check it a few times a day. I'm not going to be in there the entire time. But that's there. I really, some folks really like a big group and a lot of people talking, a lot going. If you're not familiar, I didn't say Top Step Trader. I don't, again, another firm I really don't believe in. I'm talking about Mr. Top Step, Danny Riley. He used to work. Danny approached me about having a room there, which I do. Danny used to run the largest S&P 500 futures desk in the world. And his DNA in the market goes deep. He's very deep friends with Marty Schwartz. Danny is in there trading it every day, talking about what he's trading. A lot of people like that sort of view. So that's there as well for folks. Just let me know, right, if you want access to that. But I think we need more no-nonsense trading. I think we need more sharp trade. In other words, you got to see some of the daily grind, because trading is a daily grind, and it should be daily, and it should be repetitive. And if the mandate calls you for going down a specific route, then that's what you should do, right? And you shouldn't tweak it. And that's what I'm in the middle of right now. At the same time, and there should be some sort of position review. I got to figure out how to do that more quickly. We're going to do more no-nonsense trading. We're just going to do the daily note, and then we're just going to have entries and talking about what we're doing in the different strats. And if you got questions, holler them out. And it's just going to be one tier. I'm not going to split it up. Okay? There is a 7-day free trial, and if you come over, there's this video that's pinned, and I think I've made everything that was tier 2, tier 1 now. So it's quantitative discretionary, systematic discretionary, and qualitative data, and it reviews a lot of that and what we mean by each, and then it continues. There's a link here at the bottom, and it'll take you to the next article, and I believe we started a bubble as of November of 2023. So does that say 2027? That should say 2024. I'll have to change that. There we go, 2024. But anyways, we had like a 6-part series. If you get the free trial, you can go through all of this. Why I believe both quantitatively and qualitatively, and as well as some discretionary reads, I think we've entered a bubble. So now I specify in here that Ray Dalio had a piece on bubbles and why he doesn't think we're at the bubble phase yet. And I think if you read Ray's piece, I agree with it, and I liked Ray's piece, and I think everybody should read it, and I link it here. I think Ray's talking about, when you read his piece, when are you at a 2000? When are you at 2001, where the whole thing's going to unravel? I think he's speaking about, and I could be wrong, people can correct me, but I think he's speaking about late-stage bubbles. I think we just entered it. It's just begun, right? And I get into the reasons, and at the bottom of each article it links. So you can go there. You can check that out. So let's talk a little bit now. That's what we've offered. That's where I've been at. That's how I am back. That's how I can facilitate myself being back in a corporate structure. That's what we offer. I want to talk a little bit about VIX term, right? So for what are we calling it? Read the report or read the positioning, folks. I might even rename it. We'll have to see. But regardless, for premium members, as you know, I've been heavily watching SOFR futures and the SOFR curve. We nailed that one beautifully. What did I say September 11th? I said the rates markets have lost their minds. There is no way you're getting that many cuts before the end of the year. Bam! Man, we've just been bang on that. I would not be surprised to see a little bit of a relief rally in price to lower yields, right? But we talk about that many days. And I'm going to talk more about it in video entries. I want to talk about VIX terms because some people have asked about VIX terms. And let me just say this. There's probably as many takes on VIX terms as there are traders. That's somewhat hyperbole, speaking in hyperbole, but there are many ways to approach it. But if you go back and you look through many of the weekly notes, you're going to see this also requires that you understand backwardation and contango. Okay, let me think of a simple sort of Dan way to explain this. If you don't care, like things in the future are generally going to cost more. All right, I'm just going to go through this very rough, down and dirty definitions just so you know. So why? Why should things in the future cost more? Because, well, it's the future. It's uncertain. For commodities, there's insurance, there's storage, there's crop risk. There's also sorts of things like that, right? So in other words, when you're looking at contracts in the future, now this is VIX, so it's not a crop. But the whole general idea is when you're looking in the future, prices should be more expensive, right? And then closer up, sort of all the factors are known, so the price should be, a little bit closer to what the price should be. Arbitrage and many other things shrink that price to what the price actually should be. And then as you go further in the future, this is called Contango. When you go further in the future, it should get more and more expensive, right? It works with VIX. It works with everything that has term structure. And when we say term structure, we mean those contracts and futures. Now, I'm not talking about trading them. I just look at it for a tell. So what we're talking about here is looking at term structure as a tell. Now, I've been printing this every week. This is why. I look at it as a sort of a biasing mechanism. What's the state of implied volatility right now? And when you look at the terms, you see where there is concern. And if you go back much farther than this particular weekly note, and we do all the graphics on the weekly notes, October 28th, you'll see leading up to the election, VIX term was popping around like crazy. Now, backwardation is when that reverses. So like here you see cash, November, the Nov and the Dece flipping, right? And then there's a lot of uncertainty and it's popping around. There's a lot of I've always referred to it as static. There are people that actually trade VIX term, right? There's ways to do it. There's butterflies, and I'm not talking about option butterflies. I'm talking about futures term butterflies. There's many ways to trade it. I'm not talking about that, okay? We restrict ourselves to equities at GTC Traders. I'm talking about looking at VIX term as a tell. So that's what we have been doing, okay? And we have been seeing a lot of uncertainty and a lot of jumping around. And it's like implied volatility, when you look at it on a term basis, it's just very static. It shows you where the concern's at. The concern was around November from the election to the inauguration, right? Now, what was interesting to me is after the election, so where's the implied volatility? Some people call it fear. I don't really like that because of the way VIX is actually constructed. I don't really like that fear term, but if you want to view it that way, okay, whatever. But where's all the concern at, right? Here you see now the risk premiums up front. So let's just go back to backwardation and contango, right? Backwardation is when everything flips. So if you're not sure you can get any more gold, the front month's going to be more expensive. We used to call it term premium, and I don't know when they started calling it contango and backwardation. You got to remember, I've been doing this almost 30 years. We used to call it term premium, right? Way back in the day. And I don't know when they started calling it contango and backwardation. I still get those. I know guys that have been trading off the floor, successfully migrated to the screen. They've been trading since like the 80s. And they still get confused because we used to use other terms other than backwardation and contango. But backwardation's like, no, I don't know the way the crop's going. If there's going to be wheat, I want it and want it right now. So then it's saying, and the prices will be more expensive right now. It tends to indicate fear. It tends to indicate uncertainty. I need it now, right? And then things go into backwardation, which is when you see the near to like more expensive now, right? Like if you don't ever know if you could ever get another Rolex again, the prices of Rolexes are going to shoot way the heck up, right? Because I don't know. I need it right now. I'll pay anything. Simple sub, right? A Rolex sub. It's like, nope, I'll pay you $100,000, right? It's like, who would ever pay $100,000 for a Rolex sub? Well, if you don't know if they're ever going to make any more ever again, something Rolex is sort of good at. I don't mean on subs. I just mean on, controlling their product. They're very, very, very good at it. But regardless, you'd be willing to pay more. And then that's called slipping into backwardation, right? Is when the near terms are worth more. So that's why we say there was a lot of uncertainty, right? And you saw it just static, and you saw a lot of backwardation. In other words, nope, now the fear and the implied volatility is now, and now. And we don't care about later. And you'll see when it is. So I bring all of this up just to explain why we include it. It's just a biasing tool, right? There are folks that trade it. There are folks that use it like me as a biasing tool to see where the uncertainty lays, where the concern may be, when we might see that concern arise. We had the election, right? And we went from VIX terms that were looking like this. So backwardation somewhat came down. Then tons of uncertainty, right? You just saw that. It was all based around the election. And we didn't return to backwardation until like May of 25, right? And then after the election, boom, clear skies. So it went from like, I call this static pop, where it's static, it's popping around like that in backwardation on the terms, to clear contango. 15.3, 15.6, 16, 16, 17, 17, 17, 18, 19. All the uncertainty of implied volatility just clear. So, as everyone knows that is the premium members, our mandate for quantitative reasons has us playing a very knit and a very, very conservative game right now, right? Very much in line with Buffett for like 5 or 6 different reasons. If we can print 9% each year, we're going to be happy with that, right? So why did I take? So this is one of the things where I saw that, and we popped, and we've had a lot of false starts on those risk mix relationship trades, and I was like, nope, I'm taking it. Well, why? Why did you take it this time and not the other times? Because other times I'm looking at VIX terms, and it's like, I don't know if I want to take this as knit and as conservative as we're playing. Do you see how it works as sort of a filtering or bias tool? I'm not looking at specifics. I'm not getting into any granular bit. I'm definitely not trading future butterflies or future spreads on it. I'm not. I don't even know about I've never even looked at how executable that would be. There's some term structures that are just like, you can look at a double butterfly and you think you want to trade it. Oh, tops and bottoms would be easy, and you can't execute it. So I haven't looked at anything like that with VIX terms. I have used this for a long, long time as simply a biasing tool. So after the election, I saw us start to rally, and I saw all the VIX terms do this, which is exactly why you saw me hop on board. It's like, all right, cool, we're buying the risk mix. And you saw when we rallied and we paused, what do you know about our mandate this year that we've talked about, in this premium content? So why do you think, and boy, did I take profits at the perfect time. Was it some innate genius? Nah, I just did what the mandate said. For all of the reasons we mentioned in the bubble video, we have constructed if we want to use the term to where we can appear fancy, but it's really, really not, heuristically dynamic portfolio adjustment, as Nick would say. Dan would call it a heuristically dynamic portfolio adjustment, and it's like, knock that off. Right? We make very, very simple adjustments because of what we see that we have tested out rigorously, and we're playing in a game. So when I saw the VIX terms clear out like that and go flip back into such beautiful contango from the static backwardation that it was in, and we begin to rally, bam, I'm on board. But that doesn't negate our portfolio mandate, which says play a knit game, right? So when I had gains that really cleared up our year, it was like, take them. Don't let this one run. Just take them, right? And then, the market could have easily rallied. Binary events are binary events. Skills only proven after iterations and iterations and years, right? So I say all of the preceding to say, I just wanted to have an entry out there for premium members. A little bit more back in the no-nonsense spirit days, and I think we're going to have more of these. I don't know what I'm going to do with the position review, because you got to understand the position review is very, very, very simple at the private prop firm, but I got to strip out all the NDA stuff, right, to transfer, and that's what takes so much time. So I don't know. We'll see what we have to do. It might be just easier for me. If I'm going to spend that much time, might as well just do a video entry. You know what I mean? Like we used to do on Sharpe Trade days and no-nonsense trading days. So that's why we did what we did this last month, and I wanted to say that. And again, what I said earlier in the month, folks, the premium folks, what I said earlier in the month, I gotta tell you, there's a lot to uncover if you do a lot of here. Let me ask a question to you rather than just tell you the answer. Okay, if you look through your gains, you look through your trade because you track each day what your net lick is, and therefore you know every single day how much your strategy is up. How many months did you have that you eventually booked as a loss that were actually a gain, maybe even a good gain, somewhere in the middle of that month? If you start pulling apart those rocks, there is a lot to uncover there. There's a lot to uncover. We didn't stop short-term trading because I just want to go do something else. Think about it. If you looked over the years and you had the net lick of your performance every day, inside months that were losing months, how many of those months were you actually up on? And is there something you could figure out to do there? Interesting little question, ain't it? So we're going to leave you with that. One other thing we're going to do for Tier 1 folks, and now I think if we do, I'm also looking to have a little more time, right? And that's why we're sort of restructuring things for the premium members. Folks who have been with us for a while in the premium content, so folks that have been with us here, we're going to keep track how long everybody's with us. As I create the trading course, the new greatly expanded trading course, you'll just get it prorated to what the price of the course is. You know what I mean? It's like if you've been with us for a while and you've been paying $15 a month, and after a while that builds up, then if it's a 10 video series, right? And you've paid in $200 over the course of so many months, we're going to throw you a video, right? And then if you continue with us on Read the Positioning or whatever we end up renaming it, Read the Report or whatever, for another while, and it sort of pro-rata works out to the cost of the course, we're going to throw you another video on the trading course. So you could pick up the trading course, you could say, on a little bit of a layaway, right? Course is still coming. It is coming, though, okay? So that's something else we wanted to say that we're going to sort of rearrange and do for folks. When we have that course out, like I said, I've learned more in the last 7 years than I had in the previous 17. When we put that course out, if you've been with us for a long time in the premium content, we're just going to give you one course on a pro-rata basis to how long you've been subscribed to the value of the course. Make sense? Hope it does. So with that, I'm going to let you go. We've gone over a few things here. Sharpe Trade folks that I haven't talked to in a while. Hope you're doing well. I am insanely busy. I got to do BOI information for all the different companies still. I still got to finish up. I got to go over the financials of a couple companies. And then, wow, I've got some other stuff going on the institutional front that is, wow. And I'm going to get back to that. All right? So take a gander. If you enjoyed all that stuff, check us out, right? And with that, we will let you go. All the proceeding has been what it always is. It's simply been what it has always been all of these years, right? It's simply been our thoughts, not yours, for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.